Hey, this is Sasha, and welcome to another episode on Hungry for Returns, where I answer your trading and investing questions based on my own past successes and screw-ups. Now, today we have a question coming in from Sammy. We're going to talk about technical analysis and hitting support and resistance levels. Now, if you have a question, go check out tradersfly.com, so that way you can submit one by voice. Otherwise, I'll screen capture some of your comments on YouTube and might make it into an episode. So let's take a look here at the question here and check out what's going on. So here we have a question from Sammy where it says, your videos are great. Just wanted to clarify though, you draw a support line with just one point touching it. I know this is a rough drawing, but wanted to know if you'd actually put value in a support line that's only been tested by price once. So here's the answer to you. Let's look on screen here, and the real answer is, yeah, I would. And that is because, you know, the more times that it hits it, is sometimes it plays around. What basically happens is that when you have a support level or a resistance level, but I'll talk about support. When you have a support level that it gets hit once, then it gets hit twice, sometimes if it doesn't bounce very strongly by the second or third time, it shows that there's weakness in the stock. If it bounces off of just once very quickly, there's usually strength in the bounce. So when you look and evaluate these different companies, of course, having 2 or 3 levels of resistance and then a stock breaks it and comes back and touches support multiple times, it's more confirming and it feels good on us on a psychological level, but strong stocks can bounce very, very quickly off of a single level. So let's take a look here at Netflix, for example. You can see this stock broke out here because if we really back it up, there's no support and resistance in the past. So when you look at this and we draw and look at this kind of diagram here, really your support here was this gap, right? That stock gapped up, so your support was at that level. So let me get rid of this. And you can see that here our support was this gap. So there's our support. It hit it one time. That was it, one time. Now, if we continue drawing it, okay, you can see there we've hit it a second time. Now, we got into it and we bounced, but we bounced in a weak way. And this is what I'm talking about, is that if it hangs around there, it could be weak, weak, weak. And sometimes you'll notice that these things will break those supports, but for a short period of time because they're testing. These money managers, some people are trying to get in it really, really early. And that's why you got to give stocks a little bit of wiggle room, right? If it's a $100 stock, you might give it $2, $3 wiggle room. If it's a $400 stock, you might need to give it $5, $10 or $20 of wiggle room. If it's a $5 stock, 20 cents of wiggle room or something like that. It really just depends. But you can see we kind of broke it a little bit here, but it still was the support level. So really by the third time, so you got 1, 2, 3, by the third time, in this case, the support held. But you might say, hey, well, it really bounced off of that one last point, because if you look at the weekly chart, you technically, in a way, theoretically speaking, you hit that one support. But see, people would negate and forget about that one. So you could say, okay, it hit it twice, but it's only 2 or 3 times. It's not a lot, but it still worked, and you had a very strong bounce. Now, could this stock still roll over in the future? Absolutely, absolutely. If we take a look at another example here, let's look at Square. Okay, so here, again, let's put some value into some things. Here we have resistance one time. Well, it broke out eventually, and then here it bounced one time. So there's still value in it because that's where buyers stepped in. That's where the direction changed. Now, there's other instances where, let's look at Win, for example. You might have support where here the stock sold off, just to give you a bigger picture. Here's kind of the monthly view, right? The stock climbed higher, sold off, climbed higher, moved sideways here, climbed higher, pulled back. So let's evaluate this area right here. So if we look at the weekly, so look, this stock, here was our basing area. Here we had support multiple times. And then as we went higher again, we've had support multiple times. So let's zoom in into that zone. So you can see here, okay, we've had one, and this is by week, so we might have 3 or 4 for every single one of these, right? 1, 2, 3, maybe 4, 5 weeks where it touched. So it could be, let's say 2-3 days out of each one of those it touched. So 5 times 2, 10, maybe 10, 12 times that it touched. So you can see this is more of a consolidation pattern. It's going to have more support and resistance, but stocks that have a very clear and quick direction change may only hit it a couple times. So as I start looking forward on this support level, right, you can see, okay, well, it didn't really touch it here and it didn't really touch it there, but in theory, it's very close, right? That wiggle room that we talked about. So 2 times right here, and then it changed direction. So this, of course, is more confident that there's a very nice support level there, but this stock maybe is not as strong or powerful as Netflix to react and bounce from a reversing trend. So again, you have to give it some weight depending on the stock, but 1 or 2 times is still support. So you have to give it that credit that if it changed direction, it still changed direction because that's where the value buyers stepped in. So do I give it weight? If the support is there, the support is there. It's just, if it hit it 2 times, you're a little more comfortable. Once it starts going like 10, 15 times and you're consolidating, you start to actually get worried, is this thing going to roll over? So in this case here, you kind of wonder, well, are we going to roll over because their buyers aren't stepping up? So you have to always think about that as well, that too long hanging out at a support or resistance level could also be problematic. So anyways, I hope this was helpful and insightful. And if you have a question, go to tradersfly.com and submit a question by voice. So that way I don't have to extract your YouTube comments. But other than that, feel free to submit some questions and you might be featured on the show. Thanks for joining me. Be sure to subscribe, join the newsletter list so that way you get notified as I release new books, courses, products, materials, maybe sometimes discounts. I don't do discounts that often. It just takes a lot of time to set up the coupons and take them off. But in any case, if you're on the newsletter list, at least you know when things are coming out. So thanks for joining me. I'll see you next time.